When you see the whole world shaking and you feel your heart is breaking, take my hand, no hesitating. When you're just so tired of trying, all alone you feel like hiding. Together we'll keep fighting. There's no stopping us. Hold on, we're gonna make it. We're gonna make it. Don't stop now. Hold on, we're gonna make it. We're gonna mountains to how we can climb it. Feel it, we're taking the moment. There's no stopping us. Hold on, we're gonna make it. We're gonna make it. Can you see the sun is shining like a new hope? Feel it rising, coming over the horizon. There's no stopping us. Hold on, we're gonna make it. We're gonna make it. Don't stop now. Hold on, we're gonna make it. We're gonna mountains to how we can climb it. Feel it, we're taking a moment. There's no stopping us. Hold on, we're gonna make it. We're gonna make it. Don't you give up, don't you give up on me. Don't you give up, don't you give up now. Don't you give up, don't you give up on me. Don't you give up, don't you give up now. Don't you give up, don't you give up on me. Don't you give up, don't you give up now. Don't you give up, don't you give up on me. Don't you give up, don't you give up now. There's no stopping.
Good evening. Well, it's actually a little bit after 3 on Saturday, March 9th. I'm pre-recording it tonight because going out this evening, going to see wrestling with my son. So I'm doing it now. I'm Chris Gargiulo. I am a licensed referral specialist and an associate broker for Realty Connect LLC. And this is my weekly podcast, Real Estate with Mr. G, where we talk about current events in the real estate market, the mortgage market. I give good tips on various items. Like, for instance, today we're going to talk about credit scores. So hopefully you and people across our nation find it very, very helpful. Okay. So that's what I do. Let me explain a little bit how Realty Connect works. Wherever you see this video, or when I send out my marketing, my website that you see over here, realestatewithmrg.us, you could go to that website and you enter your information, where you want to buy or list a property anywhere in the United States. And then you will be introduced to 3 top agents in that area, and they'll send out information about themselves, and then you decide which one works best for you. Now, I could still consult you, all right? So you get that added plus. I have 30 years experience within the real estate industry. I have an MBA. I'm also a licensed real estate salesperson instructor. And so I know a lot about the industry. And I'd be very happy to help you with your transaction, right? With you buying a home or listing a home. Okay. But the actual buying, the showing of the properties, the actual listing of the property will be done by another agent. but it could be anywhere. So if you want to list a home in Hampton, but you're moving out to San Diego, I can help you. All right. So to give you a little bit, I have like 3 different videos that I have that sort of describe what Realty Connect is. I like this first one here because something I put together from scratch. And well, watch it first before I say anything. Wrong one. Wrong one. So I like that video. It's completely mine. I bought the rights to the music, and it shows like, I'm from Brooklyn, New York, see the train system and everything. But then it goes to like country areas, to wild, fields of grain. They're with the cows, and their dogs are going after the cows to put them together. Uh, a herd of cows. So I kind of like that because it represents America. And I'm able to find you a list of home anywhere, okay, within the United States. All right. So that's about Realty Connect, and that's what I do, and that's what Realty Connect does. Now, before we get into the subject matter, and we're going to have our topic question in a minute. If you watch President Biden's State of the Union speech on Thursday night, he talked about some things that will help homeowners, and even homeowners who are moving up to a larger house. So let me get that on the screen. So President Biden is proposing a $5,000 tax credit for first-time buyers in his State of the Union address. And I'm going to move down here. Now, this is on a website, so I can't really do with a yellow highlight. But over here, he said, I want to provide an annual tax credit that will give Americans $400 a month for the next 2 years as mortgage rates come down to put towards their mortgage when they buy a first home or trade up for a little bit more space, the president said during his speech on Thursday night. Through that proposed program, middle-class first-time homebuyers will receive an annual tax credit of $5,000 per year for 2 years. The credit adds up to lowering the mortgage rate by lowering the mortgage rate by more than 1.5 percentage points on the median price home, the White House said in its press release, which has the power to aid more than 3.5 million middle-class potential buyers in purchasing their first home after the next 2 years. The announcement did not specify how middle class home buyers will be defined. So he's going to have to put it in the range. So middle class, I don't know, it might be from from the low, maybe from 25,000 a year to, he might say 150,000 a year. I don't know. I know a lot of times when President Biden gives a speech on taxes not going up on the middle class, he always used like the boundary of 400,000 income, and that's a pretty good income. So I don't know if he considers that middle class, but $400,000 a year is pretty good, So that he has to define that. And my other question is just the logistics of it. If you start using this auto credit, which actually goes against what you owe, okay, to the government. Now, a tax credit, they have refundable and non-refundable. So it could be a tax credit, like, for instance, if you completely wipe out what you owe to the government when you do your tax returns, then you pay nothing. But let's say you owed $4,000 and you use this $5,000, you get the $1,000 back. That all has to be worked out. But I imagine what the plan is that you're going to use that money and then buy down your mortgage rate. You could buy down the points. So if the actual mortgage rate goes down throughout this year and next, and then you could buy it down even more with this tax credit, that'll be pretty sweet. And the other logistic is like, so on your tax return, there has to be a form or a section where you say, well, I want to be a home buyer in the next 2 years. But what keeps that from people applying for that, but then never applying for a mortgage, never actually buying a new home or a second home? So all of this has to be worked out. But it sounds good, right? Sounds like a good thing. So hopefully that does come. Now that has to be voted upon, right? And then what he adds here, Biden also asked Congress to pass legislation that provide a 1-year tax credit for up to $10,000 to households that will sell their starter home, their very first home, if that home is below the median home price in their county, with the hopes that the incentive will free up more affordable inventory. He also recommitted to cracking down on big landlords who break antitrust laws by price fixing. So there's going to be a lot of, again, I'm going to use the term just in it because, see, if that, for the homeowners in existence right now, if their present home is below median home price in that county, that they will be then afforded that $10,000 tax credit. And again, it's going to be based upon their income. So these are good plans, just the in and outs of them, how it will really be implemented. Now, Congress first has to vote on it. They have to agree to it. It would be a good idea. I mean, one of the biggest complaints, right, about the current inflation, the current economy, is that prices are too high. And the two biggest categories for that high price is both for groceries that people, shop maybe every day, maybe every other day, and their rents and their home prices, right? So I think on both sides of the political table, they should come to an agreement with this because it'll help the economy fantastically. And it'll solve a problem that a lot of people have today with housing. So I think it's a really, really, really good thing. Again, the nuts and bolts of it has to be worked out. and it has to be approved by Congress. But I think it's something that even the Republicans will go for because, like I said, it's very helpful. All right, so let's go with that in mind, and in the category of hopefully buying down mortgage rates, let's have our question today. I think this is Michael from Pittsburgh.
Good day, Mr. G, and thanks for allowing me to be on your video podcast. I am a first-time home buyer and I need some tips on how to better understand credit scores and to increase my own. Any advice would be most appreciated. Love your weekly video podcasts and watch it with my family and friends. Keep it going strong throughout 2024. Thanks again.
Thank you, Michael from Pittsburgh. All right, so what do we have here? Want to know about credit scores before buying a home. And before I even go through this article that's on my blog this week, by the way, 9 out of 10 times with my podcast, we'll discuss an article that was on my blog this week. There might be some instances where I'll just do a whole completely other topic, but most of the times it's what's on my blog and in my weekly newsletter. And I need to actually advertise that too, how to get my weekly newsletter too. So this is another idea that I have to get, that I will get more subscribers to it. I have a good amount right now, but want to add more. So first thing I want to say, and this is the biggest issue I had when dealing with clients, they'll call, contact me, they're interested in buying a home, they're ready to buy. They say they already have the properties lined up what they want to see. And I ask them, well, have you spoken to a mortgage loan officer? And most of the times it's no. And they'll say, let me see what's out there first before I start the whole talks with the mortgage loan officer. And most real estate agents won't even take out a client to look at a home. I'm a little bit, of a pushover. And if they haven't been pre-approved yet, I'll show them one home just to meet them, to talk to them, discuss the market, and say, but now you have to go speak to a mortgage loan officer. But it's most important because, number one, you have to see if you are actually going to be approved at this point of time. It's been my experience, people who believe their credit is great, when they speak to the mortgage loan officer, there's problems on it, and they might need a couple of months to clear it up, right? And those who say, well, I think my credit stinks, and we actually look at it, and it's not all instances. I mean, if that person hasn't been paying their bills, they haven't been making their monthly payments on time, I mean, then definitely it's going to be down. But people are just like, they automatically, they pay out, monthly on time by the due date. And sometimes they'll be like, well, my credit's probably stinky. And then you look at it and it's fine. It's really a mixed bag. But the important thing is, number one, to find out if you're ready to be approved right now. Because if I or another agent shows you a bunch of homes, you find your dream home, and you're all excited, oh, I want that house. I already see my furniture in there. I see my kids playing in there. And then you find out they need about 3 months to get their credit in order. They have to raise their credit score. And that's a downer. So you need to do it first. And once you get that pre-approval or pre-qualification letter, and there's a difference. Pre-qualification is when you speak to the mortgage loan officer over the phone. You say, this is my income. All right, I have this job. Maybe I have other sources of income. It could be alimony. It could be child support. It could be a secondary job. And then they put that together and they look at your credit report and they say, okay, based upon these numbers and what information you gave me, I could pre-qualify you for $300,000, let's say. And they send out the letter, and when we show you the homes, when you make that offer, when we put together that purchase agreement, that letter goes along with it, and the seller knows that you're serious, that you're approved for that amount of the house, and it should go smoothly. So that's very important. And the second reason you need to be pre-qualified beforehand is that you need to know your price range. So you might have, what they say, champagne taste, but beer pocket money, So if you're looking at homes that are $300,000, but the most you could do is $250,000, well, if we were looking at those $300,000 homes, we wasted a lot of time. So you need to know what price range you need to stay in. Now, I talked about pre-qualification. Let's talk about pre-approval. Pre-approval is when you actually sit down with the loan officer, you submit your W-2s, your last 2 years tax income, and then it goes to underwriting, and that person will dot all the I's and cross all the T's. They will check everything. All right, and our discussion last week is we're heading to a mortgage crisis, and we're not, because I'm sorry, a housing crash, because now their lending guidelines are more strict. So they're going to check everything closely. Most of the times where there's an issue, when you have an income that's not regular, or it might be a commission type of income, or I had one example where this man had properties in the islands, like in the Caribbean, and the people who rented would just make deposits to his bank account. They would put cash in there. So he had no regular proof. I mean, I'm not saying he's lying, but you could show cash coming to the account, but he can't prove where it's coming from. So if there's a check every month that comes in for, let's say, $1,000, and the underwriter looks at the copy of the check, everything is online now, and say, oh yeah, it's coming from this renter and it's going to the landlord, then that's fine. So what happened is that deal did not go through. Basically, if you work for one company, you get a W-2 at the end of the year, and that's it. There's no really question about the income, how much you make, but it's these additional incomes. Or if you work purely on a commission basis, if you're in business for yourself, which a lot of real estate agents are, if they're in it 100%, they have to see like 2 years of income coming in from that job. If you just start up being a real estate agent, and even if you had a great year, if that's the only source of income, you're not going to be able to buy the house in the second year. You have to wait till that second year to show 2 years of income coming in from your real estate work, and then you could apply for a house. But, we went to a lot of side pockets here. The most important thing is to do that pre-qualification process before you start looking. And the agent is not being mad or not being evil. It's just, it's going to save both of you a lot of time and anguish. Again, if you see that perfect home and you want it so bad, and then all of a sudden the mortgage broker said no. I can't write you a mortgage for that house, and you have to get your credit in better order. So the purpose too of this of this article is that well, it's basically this portion here that's highlighted in yellow. It's important to know where your credit stands and how to use it to get the best mortgage rate as possible. And of course, the better your credit score is, the higher it is, the better the rate you will have. And that's so crucial in this time period with mortgage rates being so high. They came down a little bit this week, but they're still close to 7. So the lower the rate you could get, the lower your monthly mortgage payment would be. So you really need to get that down if you're right at that cusp of, I really like this house. That's 300,000. They approve me up to 300,000, or let's say it's 300,000. You got approved up to about 290. But if I get a good rate, I might be able to be eligible for a mortgage. So it's important to get that worked out beforehand. Now, like in the article here, it says, the medium score is 770. That's actually pretty high. And you have that, that's great. Usually, mortgage loan offices will start approving mortgages or work with like a 620 score. 640 is even better. You could be eligible for a mortgage. You might have to show some sort of documentation if any of the credit lines were late. But they could usually work between 620 and 640. Now, there are some loan offices that say, we could work with 580, but the 580 is when your credit was hurt by medical bills. Because no one really plans, right, to go in the hospital and get sick. So you're not being irresponsible, right, if you get really sick and you're having trouble paying your medical bills. But if you have credit cards that are going unpaid, then that's a situation because you voluntarily took out that credit card and bought items, and maybe you bought too much that you can't afford. So usually 580 if it's medical bills, but usually around 620 to 640, they will start working with that. So while many lenders use credit scores like FICO scores to help them making lending decisions, each lender has its own strategy, including the level of risk it finds acceptable. There is no single cutoff score used by all lenders, and there are many additional factors that lenders may use to determine your actual interest rates. Okay? So again, you might have a mortgage company who'll be a little bit more understanding when you have a lower score because of medical bills. Or a lower score because maybe you went through a divorce, but you got your feet back on the ground. Okay? It's really a case-by-case situation. If you have an extremely low credit score, then you just have to increase your credit, right? But you're on that cusp, like I said, 580 to 620 because of extenuating circumstances. But 620, 640, and going up, of course, you get closer to 700. You should not have a problem being pre-approved. And what are some of the highlights of your credit score? What's part of it? Well, your payment history. Late payments can have a negative impact by dropping your score. Focus on making payments on time and paying any existing late charges quickly. And you could also let's say for some reason you missed a payment and it was either your first time or it's been about 6 months since the last time, you could call the credit company and ask them for that late fee to be forgiven, and ask them if it does not have to be reported to the credit reporting agencies. And your debt amount relative to your credit limits. When it comes to your available credit market, the less you're using, the better. The rule of thumb, keep it at 30%. That's, if you can, pay off your credit balance, within the first month or maybe 60 days. But let's say if you have a credit line of $1,000, you shouldn't have more of a $300 revolving balance there. And believe it or not, credit applications, if you're looking to buy something, don't apply for additional credit. When you apply for a new credit, it could result in a hard inquiry on your credit that drops your score. And we have people who do that. They got approved for the loan. They're getting ready to close. They say, all right, let me take out a credit card and they'll buy some more furniture. No, because they'll actually check your credit again right before closing. And if that large purchase knocked you out of the ballpark for the eligibility for that price of the home, the closing could be canceled. So do not take out any more credit once you start looking or you have a ratified contract. Don't co-sign for credit for loans, maybe for your children, if they're taking out a car loan or so. Don't sign for anything. Wait till when you actually close and you got the keys to the house. Then, all right, now I'll buy some furniture. All right. So we talked a lot today about what's involved with getting your credit in order when you're ready to purchase. And again, I keep on saying that the sooner the better. Once you get that pre-qualification letter, it's good for 3 months. If it's taking longer than 3 months to find that home, the mortgage loan officer could issue a new one. They'll look at your credit again. It's not like, all right, they have to look at your credit and see if there was any changes on it. But you just update it. But that's the most important. That's the biggest hurdle. That's the biggest issue I have with buyers, is them to start that pre-approval process. They're all gung-ho. They're excited about buying a house, but they didn't do the number one major step. And that's the biggest one. Okay? And after that, once you're pre-qualified, and as long as everything that you told the loan officer is solid, because then you're going to have to back it up with the paperwork. Then it's just finding a home, okay? So that's the big major step. All right, so I talked a lot here, but a little bit longer than I had wanted. We're over 30 minutes now, so let me show you my video summary on what we just discussed. All right. And the best way to combat these high scores is to get your credit in order and trying your best to get that higher uh, credit score number, right? Because the higher it is, the better mortgage rate you will get, and it'll save you a lot of money, maybe a couple thousand a year. Okay. All righty then. So this probably will change by the end of this month. I still have the winter guides for buying a home on my blog site. Oh, and we have the things to consider when selling your house. And you get that? You get that from Real Estate with Mr. G.blog, resource, .blog/resource hyphen materials right down here, okay, to the left of your screen. And you could download them for free. All right. Let me get rid of this. And I believe I'm from my from my producer Isabella. She found she found some footage of me being on the dating game in the 1970s. Is that true?
Yes, Mr. G, we found lost footage of you when you were on the dating game in the early 1970s with Suzanne Somers. Hope you don't mind us showing. You look about the same even though this was about 50 years ago. Still looking great, G.
The Girl and the T-Bird in American Graffiti, and her book of poems entitled Touch Me is being hailed as a bestseller. I'd like you to join me in a warm dating game welcome for Suzanne Somers. She loves sketching and drawing, playing basketball, and candy, and bubble gum. Please join me in a special dating game welcome for a fine young man.
Yes, 他吃饱. Yeah, I forgot all about that when I was on the dating game. That was a nice memory. It's fine. I didn't mind that you showed that. I thank you very much. And that's it for today. We had a lot of rain here in Virginia, but it's supposed to be a beautiful, glorious week coming up. We set the clocks an hour tonight ahead. So we lose an hour of sleep, but we have extra sunlight at the end of the day. And we have warmer weather, and you could be wandering outside, being outside, going shopping, riding your bike, walking along the beach. It was still too cold, and just enjoy it, okay? So remember, the greatest power we have is to love, and the greatest gift, each other. And I'll see you next week.